Welcome back to Market on Close. Let's continue to walk through what worked and didn't in this market. Crude oil definitely in the didn't category. Scott Bauer from Prosper Trading Academy is the CEO, back with us. Scott, you still shorting crude? Is that you dumping USO? I mean, what's going on here?
No. I'm out. I'm flat. Nothing going on. But you know what's to me the most interesting thing is watching the play between West Texas and Brent. A spread that you and I have talked about quite a bit. It wasn't so long ago we saw that thing expand almost to double digits and then contract back down to almost zero. Just, what was it, about 4 weeks ago? And now it's, blowing up again. And I think it's going to get wider. I really do.
So how much wide are we talking about here? I mean, can you basically just try and play one off the other? If you trade futures, can you trade a spread instead of one of the particular contracts, or having to pick an outright position on oil?
Absolutely, you can. And, historically, this trades somewhere in the range of $4 to $5, usually Brent over West Texas. And like I said, it had gotten out to double digits, back to zero. Now it's up to about $7 or so. And until we start getting back to, I'm not even going to say normal at all, but until the economy starts really reopening here, Oliver, and I know we're getting a couple states opening, that's a great thing, but until, in my opinion, maybe 20 to 25% are open, we are going to have this massive demand implosion along with nowhere to store this oil. Right now, in fact, I was talking to some traders from the trading floor, like guys that actually trade on the floor. They're not on the floor right now. And they're telling me that even though there's reports coming out that the storage facilities in Cushing are roughly maybe 75 to 80% filled, they're telling me that leases are 100% going out over the next 4 to 6 weeks. So there's nowhere to put this oil. What is that going to do to West Texas here? And that's really the big reason why I think this thing is going to spread out, maybe get to double digits again. And like you said, yes, you can just trade that spread between West Texas and Brent.
So, Scott, right now, though, nothing else in the market seems to think that there's something that's changed on the demand side, right? I mean, even energy companies are up. The S&P 500 is up. And I know that there's a lot of folks will say, the S&P is, losing its mind. It's all Fed. But, I mean, bonds are down. Bonds are down today, looking at 25% decline crude straight in the face and saying, we don't care, we're not buying treasuries.
No doubt about it. And if you look at that curve, the futures curve in oil, okay, just 3-4 weeks ago, we were seeing a very steep curve going out to June, July. Now what you're seeing, because of the shock that hit the system last week and what happened to that front month contract, is you're getting a lot of people shying away from buying the near-term contract, which expires now May 19th. And they're going out even further because of the psychology of what happened last week with that front month contract actually going negative. So what you're seeing is a very steep curve, a much steeper curve in crude going further out here, putting even more pressure on that near-term contract.
Got it. So, okay, Scott, if we take crude, I like the crude specific here, and kind of put it in a vacuum for a sec. And then we look at the rest of this market, with bonds down, stocks up, even gold's down this morning. What do you make of it, Scott? I mean, is there going to be at some point a massive rip in crude if the rest of these asset classes are saying that the demand equation hasn't changed and they're sniffing out some kind of progress for the economy? I mean, if people right now are dumping crude because they're worried that the barrel's going to be worth more than the actual oil at the end of this month again, well, the story about reopening economies in 15 days maybe that the stock market is telling could be a little bit of a glitch in that.
No doubt about it. And the market typically is a very leading indicator. And so crude is going to catch up at some point. I think it's going to be a lot longer than 15 days. I think just this gradual reopening here until we start getting some data back from these states that are opening saying that, yeah, you know what, it is safe, or, maybe we have to change or tweak something here and there. But we can do this in a very logical and most importantly, safe way. There is going to be so much pressure here, and I think that's a lot further than 15 days. Now, I wouldn't be surprised to see crude rip up in 45 or 60 days to catch up to the market. I don't see it happening imminently.
Scott, you said at the top here of our conversation, to come full circle here, that you're not shorting crude right now. Again, I'll give you the one last credit call, because you did nail the crude move to a ridiculous degree with your uber bearish short. But are you ready to go long? You're going to tell us when you feel comfortable with it?
No. Yeah, I will do that. I'll put my neck out there. I'm not ready yet. I just think right now, Oliver, honestly, there's too much of a psychological trade in the market because of what happened last week. And I think that we could really see some unbelievably volatile moves in both directions, but nothing that is sustained over the next couple weeks or so.
Got it. All right. So no to the you're not long yet, not no to the you won't tell us. You will give us the update. Appreciate it, Scott Bauer, as always,
100%.
CEO of Prosper Trading Academy. All right. Thanks, man. You got it, Scott.